You are all well. I trust you are all well and that you've been having a good time. Marlon, thanks for hosting for us. Earlier on this week, I was chatting to some of my trading buddies in Trading Buddies Show, and we spoke about what's happening in the markets. And I put up some daily charts, and I just want to quickly take us through that before I drill down to show you just how I'm thinking about some trading. So when we were speaking over the weekend, this was Friday's candle. And what I'd done over the weekend was just have a look on Saturday to see where we are at, to try and get a sense of how the market ended. Now, that candle, I mean, Thursday, the day before, was a huge bull candle. This is on DAX 30. And you would have thought the bulls would have followed through, and they did, because that was buying all the way up. But then the bears came back and sold off. And my point was, before we got to Monday's trading, why would the bears have regained the upper hand after such a strong sell-off? Well, the thing that I pointed out is a huge sell-off here. And if you look at just using key levels, lower high double top, and if we were to extend that, that's kind of what the market will be seeing. So the bears that created all of this are the ones that have been selling off here. Every time the bulls tried, sold off, bulls tried, sold off, bulls tried, sold off, bulls tried, sold off. So the problem was the doji candle, I mean the bull candle, of course. But I did say that there's likely to be a little bit more selling, and that's what we had on DAX 30. UK 100, very interesting. This line should not be visible at this level. Now, interestingly, again, that same problem that we had, or not a problem for the bulls, that is. That point, huge. I mean, that's bullish strength, as you can see. But then the question is, why would we have failed there? Then you just have a quick look to the left and you wonder, well, maybe these bears that created this are the ones that are defending that. And it's true that it's these bears that are defending. I mean, this is just strong bullish strength. But then why would we fail at that level? So again, going into the week, kind of thinking bearish. Another market, I don't know who's trading this amongst us. Probably guys on the Asian side will be trading this. Have a look at Aussie 200. It's not a chart that I'm actively trading, but just put it up to demonstrate the point. I mean, if you look at this failure here after the huge bull candle, again, things happening on the Thursday, Friday failed, and you're going to think, well, why would the bears be able to have a dominant hand over the market? Well, you look again to the left. So the point here is trying to draw your attention to what's taken place previously, lower high, and of course, we get a little bit more selling. Who knows what we're going to get, because we are going into this slew of news candles. Let's have a look at my news. There's news tonight in about 7.5 hours time. Big news. Many of the big banks making their news announcements. Then this was a market that was different. Okay, this is US. Now, on Thursday, yes, we had a bull rally like most markets, but come to Friday, just huge sell-off, big outside candle. And that alone, if you compare to UK 100, compared to what we had on DAX 30, Aussie 200, Aussie, good sell-off. So that's almost comparative. But this huge sell-off here probably would have raised many alarm bells. But hang on a second, why would this huge market sell off quite dramatically at this particular stage? So alarm bells should be going off for bulls. I mean, if you've gone in to just buy above that, I mean, put your stop there, you would have been stopped out. Even if you put your stop there, it would be stopped out. So the point is, there's a lot of bearish price action in the market, so we're expecting bears to be pretty active at the present moment. Going into the market now, here's what I want to just dig into. I forgot to put euro versus the dollar as was requested. Well, I'll tell you what, I'm just going to pop it in before I dig in a little bit. My apologies. There's guys who've been on to me to say, listen, George, we need the euro versus the dollar, not just indexes on the show. So that's perfectly fine. We will put that in 2 seconds to set it up. Okay, because, I mean, we are currency traders as well. So I did have a look at it earlier on request. This I was preparing, but okay, what I gotta do is just put it on the daily. Now, been selling off quite dramatically. Now, when I say selling off quite dramatically, that means you're looking up there, okay? But if we trade in intraday, all our price action is taking place within here. And going into the news, of course, you expect that there will be some influence on FOMC coming up. Now, what's likely to drive the market? Well, we are selling off. Just put the EMA quickly. The market has been selling off quite dramatically. The question that I was asked is, you know, if I've been trading, this is a trader, if I've been trading on a daily basis and I jumped in anywhere here, how would I hold onto my stop? Well, it's pretty difficult to, now we can look and say, oh, hang on, you know, if you sold here or here, hold on to your stop all the way there. But every time that the market sells off, it appears to be trying to reverse. It appears to be trying to reverse, appears to be trying to reverse, and then continues to sell. So if you are trading intraday, a 5-minute chart in the day, we drill down to that. You're looking at what's taking place in the actual day. And you're not really, I mean, you kind of know, okay, we've been selling off, but I'm looking to take my trades in the day and then exit in the day. If I'm trading on a higher time frame chart, on a daily time frame chart, then I got to be deciding which is a key lower high for me to trail my stop. So, you know, if you sold within here, you could have moved your stop down to there, it would have been stopped out. Okay, probably just less than 1-to-1. But then if it does that, you sell off again, and your stop would have been here at the present moment. If you're selling on that, you know, again, if you go up higher, you sell off, key lower high. You know, if you put your stop here, and would you put your stop there? But if you did as a lower high, it would have been stopped out or here. What do you look for in terms of lower highs, in terms of saying, where should I put my stop? What's distinct for you? What's significant in terms of what the market is actually doing? That's where you put your stop, if you're trailing it down or trailing it up. Now, if you're trading intraday, we're going into the daily. It could be anything, hourly, 5-minute. Things are different, right? On the daily chart, you could be holding on to a huge position, or not huge position, to a lot of profits, and the market is coming down. But intraday, you'll have opportunities to go up, or you can say the daily time frame is selling off. So I am just going to wait to see if I get opportunities to short. And if I see those opportunities short, then I must just find a way to put my stop. Look to the left and decide where to put your stop. Or you just open up the window and trade exactly what you are seeing. Okay. I want to just dig in a little bit into dark state. Remember what we spoke about earlier on. So this is presently what the market is doing. Depending when you go into the market, this yellow rectangle marks the open of the the Frankfurt Exchange. This year marks the open of the UK stock market, and I had a measured move here of this little pullback to get to here, and I'll explain what that is all about just now. So you just popped in, opened your charts, and you're trying to figure out, well, what's taking place. The market has been going up, but as it's going up, unlike what we had, that was on the daily, but I'm just going to put it up for illustration. Okay, look at that huge bull breakout. Okay, consistent bullish price action, and then it failed. But if you look at what we had here, okay, the German open, good bullish price action, deep pullback, and then we had bulls coming in, pullback, pullback. So every time that the bulls have gone up, the market has been trying to push up higher and higher. Tried 3 times, 1, 2, 3. You can see the slides lightly colored green. That's an indicator of yesterday's high. So the objective, as far as the bulls are concerned, is to get above the high, which they did. And after getting above the high, they want to just keep going higher and higher. But now, for some reason, and we know what the reason is because of what I started off earlier on, the bears have come back into the market and the bears are selling off. So if you had jumped into the market earlier on, outside candle, you need to put your stop down here, and you might have had to get out with this pullback. No strong enough signal for us to jump in to go long. If you wanted to go long on the strength of the opening, you have to put your stop down here. But it really would be tricky because you're not getting a decent enough signal, right, for us to go long. Then we break out above the high of yesterday. Good breakout, follow through. This candle is a breakout candle. I mean, this one here failed to breakout. But then we have bears, and again, starts to raise the question, why do we have bears coming into the market? So after 3 attempts to go up, if you want to sell here, you got to then decide, where would I put my stop? And that's a place where you could put your stop. Sell here, sell when it comes down. Sell here, you could, but again, your stop is still up here. So, you could sell here. That's probably the best signal. You could sell here if you wanted. Okay, but any sell, the stop is up here, and you are selling because you think the bears are strong enough to accelerate down. Could you have bought this? You could have bought that if you wanted. The problem is where you put your stop will have to be down here. So again, you always got to be looking to find the nearest level to put your stop. So if you make the decision that you want to buy above that level, okay, buying up outside candle, you can't put your stop here. It's too close. You have to put your stop here. And now you're wondering, is there enough depth left for me in the market to at least get to 1-to-1? Doesn't look like it. So you might skip that. Or if you take it and it starts to go against you, that's fine. You can come out of the trade. If you sell that, what was the first sell? If you sell that or you sell that, you open the market accelerates down, and the bears come to the market. But we are going sideways. We're in FOMC market. You may not get the opportunities that you need. So you just need to manage things a little bit tightly. Trading range, price action, either hold onto your trade, with the appropriate stop if you're going up. If you bought this and you said, I'm going to hold onto it, by this time, after it's gone sideways for so long, you can pull your stop up to there. Okay, so the stop will be beneath here, and then just hold it. Or if you come all the way down, you want to get out, you can. If you sold and your stop is up there, you can tighten your stop if you want it for a measured move, and be prepared to be stopped out. Now, how do you trade at FOMC? Things are going to get dramatic. So decide the maximum risk you're prepared to put in for the day. I don't know, 1%, 2%, 3%. And trade. you know, if you get stopped out, as long as you stay within your maximum risk for the day, that's fine. But if you catch one of those accelerated moves that may occur, absolutely fine. We're still a long way away from the news, so it's okay to keep trading until then. All right, guys, thank you very much. We will catch up again next week. Yeah, oh, if you found, let me just check. Excellent. Thank you very much. Take care, and we shall see you again. Bye-bye.